Welcome, and thank you for standing by. At this time, all participants are in a listen-only mode until the question-and-answer session of today's call. At that time, if you would like to ask a question, you may press star one. Today's conference is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the meeting over to Tanya Vartavarian. You may begin.
Hello, thank you so much. Again, my name is Tanya Vartavarian, and I am the Acting Program Manager for the CDFI NACA program team here at the CDFI Fund. Thank you so much for taking the time and joining us for the Matching Funds webinar for the Financial Assistance for FA program. Before I hand off the webinar to my colleagues, I want to note that there will be a Q&A session at the end of the presentation. You probably noticed, or you will notice, that the Q&A chat feature has been disabled. So we ask that you note any questions that you may have during the course of the presentation, or maybe that you came in with, and there will be an opportunity at the end for you to ask them. We will be happy to answer general questions and try our best to answer all of your questions, but note that we might ask you to submit a service request with specific questions to your organization, or, for example, a specific matching fund source. As we all know, matching funds can be quite specific and perhaps nuanced to each individual source and organization. So in those cases, we will be asking for you to submit a service request. With that, I will hand off the presentation to my colleagues, Elizabeth Hoffman and Matthew Pickering. Thank you.
Great, thanks, Tanya. This is Elizabeth Hoffman. So as we get started on our presentation today, I just want to go over quickly a few topics we won't be covering. We won't be discussing reasons why your organization was unsuccessful in prior award rounds, or any instructions on how to enter things in AMIS, our Award Information Management System. This is our Matching Funds webinar, but as Tanya said, if there are Matching Funds questions really specific to your organizations, we won't be able to delve into those today. We're taking a look at matching funds more broadly, and going to be answering questions that could be applicable to multiple groups. So the slide that you're seeing, the slides that we're presenting today are part of a larger slide deck that is available on our website in the resources section. We will navigate to that at the end of the presentation in case you are not familiar with that page. But if you are interested in any of the other topics, those could be found in the full PowerPoint slides, and today we're focusing on the matching funds. So in essence, matching funds is that when you are applying for $1 of federal assistance, you have to put up $1 of match or non-federal source at the same time to leverage the federal investment. So matching funds are required for our CDFI core program applicants, except Native American CDFIs, at the time of application. And matching funds apply to the base financial assistance program, the supplemental persistent poverty county program, and the supplemental disability funds financial assistance program. Your FA award, if you are successful, will be provided in the same type as your matching fund was. So for an example, if you provide matching funds in the form of a grant, your award will be in the form of a grant. At the time of application, all applicants need to provide evidence that they have at least half of their requested award amount in either in-hand or committed matching funds. So if I'm applying for $1 million in FA assistance, I need to have $500,000 of matching funds entered in my application when I click submit. So the full matching funds window for our FY 2022 funding cycle goes from January 1st, 2020 through January 15th, 2023. If the matching fund source that you're using was received between that January 2020 date and the application deadline, which is April 12th, 2022, that will be considered as in hand. You will have already received that. You can also use funds that are committed that you are anticipating to be received between the deadline of April 22nd all the way through January 15th, 2023. In that instance, you would indicate that the fund was committed. If you are selected to receive an award, recipients must provide evidence that 100% of your award matching funds are in hand before a payment is made. So you can receive the award and be designated an awardee, but you'll need to come back and show us evidence of the receipt of those in-hand matching funds, and the deadline in the NOFA is January 31st, 2023. When we started our program round, the FY 2021 program appropriations were still pending, but I can tell you we have an update to this. The FY 22 appropriations have come through, and the matching requirements were waived again for our CDFI FA groups and our HFFI, our Supplemental Healthy Food Financing Initiative applicants. So applicants of that type do not need to submit matching funds. The matching funds waiver for Native American CDFIs also has been permanently waived. Well, I shouldn't say also. That has been permanently waived. The CDFI and HFFI ones are waived year to year. And then note as well that matching funds are not required for our CDFI TA or our NACA TA applicants. There are several types of matching funds: grants, loans, retained earnings, in-kind contributions, equity investments, deposits, and secondary capital. All matching funds must be non-federal, and applicants can refer to Table 9 in the NOFA for details on eligible and ineligible sources, as well as there's a whole separate matching funds guidance with additional information. The next two slides are going to talk specifically about if you submit matching forms in the form of a loan, matching funds in the form of a loan. Those must have a term of 3 years or more. You can also use lines of credit or loan renewals within the matching fund window would count as loans. If you are selected to receive an award with a loan as a matching fund source, the award will be in the form of a loan, and it will be in accordance with the CDFI fund's standard loan products. Also note that CDFI funds will not permit recipients to change the form of their award. If you are awarded your award in the form of a loan, it can't be changed to a grant. It will remain a loan. And for FY22, here's some information on that standard loan product. It'll be a rate of 1.39% over 13 years, with the principal amortized payments due in the years 11 through 13, semi-interest payments, no collateral requirements, and a subsidiary lender position. With that, I will turn it over to my teammate, Matthew Pickering, who will talk to us about retained earnings.
Great. Thank you, Elizabeth. So we allow retained earnings to be used as a source of matching funds. And if you're an organization that chooses to use retained earnings, you'll receive your award in the form of a grant. You'll be required to specify that you're going to use retained earnings as part of your application. And as part of that, you'll be required to provide us with a unique calculator that varies dependent on your organization type. And we'll use that calculator to determine the total amount of retained earnings that you have available to be used as matching funds. So this calculator, which we will take a couple minutes at the end of the presentation today to look at and do a brief tutorial on, this calculator is going to adjust your financial statements or call reports, depending on your organization type, for revenue and expenses derived from federal sources, and also to deduct sources of previously used matching funds. CDFI fund, as part of our internal review process, will be reviewing your retained earnings calculator and ensuring that all of the figures that you put into the calculator match the corresponding figures in either your audited financial statements or your call reports. For unregulated institutions only, we do allow the most recent fiscal year that you report in your calculator to be used, to be derived from unaudited fiscal year-end financial statements. But just as a note, if you're an unregulated group that chooses to use this option, any retained earnings that are required that we'll use from that most recent fiscal year will be marked as committed at the time of application submission. And only after award announcements are made, we'll have to come back to your organization and request some follow-up information to verify that those matching funds retained earnings were indeed in hand. And we'll only be considering matching funds in hand based on final audited financial statements or call reports. We no longer require applicants to provide documentation of loans, grants, or in-kind contributions at the time of application. But we do require that if you're submitting matching funds in the form of retained earnings, shares, deposits, equity investments, or secondary capital, that you do have to provide documentation at the time you submit your application. And just as a note, all eligibility requirements outlined in the CDFI program NOFA do remain in effect. So CDFI program core FA applicants, and again, this does not include Native American CDFIs applying under the CDFI program. Those who are applying for base FA, PPCFA, and DFFA must complete a matching fund section in your application in AMIS. If you're submitting matching funds in any form other than retained earnings, you'll be filling out a subsection and incorporating that information directly into your FA application in AMIS. If you're going to submit matching funds in the form of retained earnings, you'll have a separate, unique little subsection that pops up in your application, and that will prompt you to fill out some information and attach your retained earnings calculator. So just follow the prompts on the application in AMIS, and it's pretty intuitive. It'll explain to you, based on which types of matching funds you intend to submit, which subsections in the application you'll be required to complete. So for every matching fund source, we require certain types of information. So we ask for the provider's name, whether the source is in hand or committed, the form of the matching fund source, contact name for the source, and other contact information, the amount of the matching fund source, the date you received it, and the associated eligible FA activity that matching funds source supported. We also ask you to attest to certain things for each matching fund source, primarily that the matching funds are not federal, or alternatively that they've lost their federal character, and that you can provide appropriate documentation that meets our requirements upon request for each matching fund source. We also ask that if the matching fund source is a loan, that you attest that the term of that loan is 3 years or longer. So documentation of matching funds is not submitted for loans, grants, and in-kind contributions at the time of application. But as I said before, you do need to make sure that you have acceptable documentation for each matching fund source that you can make available to the CDFI fund upon request. And if you have any questions about what constitutes acceptable forms of matching funds documentation, consult the FY22 CDFI program NOFA and the FY22 matching funds guidance. The reason we say this is because the CDFI fund does reserve the right to audit FY22 FA recipients' matching funds documentation to ensure compliance with all of our eligibility rules. Great, so at this point in the presentation, Elizabeth and I are going to play a little quiz game just to recap everything that we've covered so far. So Elizabeth, are you ready for this, this quiz?
I'm ready.
Okay, here we go. The first question, true or false, applicants are required to enter matching funds information directly into AMIS.
Ooh, I'm going to go with true because most matching funds forms you enter into AMIS, and if you're doing retained earnings, you also have to do the Excel calculator and upload it into AMIS. So I'm going to say that's true.
Awesome. Yes, that is totally true. And retained earnings recipients also have to fill out some additional information within the retained earnings calculator. So true or false, core FA applicants that do not qualify as Native American CDFIs must provide evidence that they have at least half of their requested award amount in hand or committed matching funds at the time of application submission.
I'm going to go with true.
Totally correct, yes. Applicants do have to provide at least 50% of your award request amount, including base FA and any supplementals like PPC, DFFA, and not HFFI, at the time of application submission. So third question, true or false? Core FA applicants that don't qualify as Native American CDFIs must submit documentation such as grant agreements or proof of payment for grant and loan sources at the time of application submission.
I believe that is false. Grants and loans are the ones that you do not have to submit the documentation at the time of application, but just have it on hand in case we ask for it later.
Absolutely, yes. That's totally correct. And again, we do require that you keep all of the documentation on hand. We do perform audits on matching funds sources. So if asked, you may be asked to provide documentation for each matching fund source. And last question, true or false, retained earnings must be calculated using the CDFI fund's institution type specific calculator.
That is true.
Totally true, yes, and we'll take a couple minutes at the end of the presentation today to take a detailed look at that calculator. And now, Elizabeth, I'll turn it back over to you to finish up the rest of the slides.
Great, thanks, Matthew. So here's a reminder of some important deadlines. I'm sure everyone has already met the March 14th deadline of submitting your SF-424 in grants.gov and getting all your information entered into AMIS. Coming up, our deadline for the application is April 12th, and so the last day to contact the CDFI or NACA program staff with program questions is 2 business days before that, which is April 8th at 5 p.m. The best and fastest way to contact us is service request from your AMIS account. On the 12th, then, you can contact the AMIS IT help desk regarding technical problems only up until 5 p.m., and you will have until 11:59 p.m. on April 12th to submit your application, but please don't wait that long. Last year we had somebody with troubles at 11:56, and we don't want that to happen to you. So submit early. Here is some contact information that might be useful if you have specific questions. But again, for any of the CDFI teams, the fastest way to get your question answered is to submit an AMIS service request through your account. We will navigate to these pages in just a minute here to show you where they are, but the Step 2 Apply page of both the CDFI Assistance and the Native Initiatives Program are where all the application materials are today. We do add things from time to time, so please check back. And actually, we're going to go ahead and look at some things on the web now, the website, and the retained earning calculator before we get to your questions and answers. So
great.
I'm going to turn it back over to Matthew.
Thank you, Elizabeth. Okay, is folks able to see the website on the screen?
Looks like it might still be loading, Matthew. Let's give it a second.
Okay.
There we go.
Great. Awesome. Thank you so much. Thank you to Andrew Schlack, too, who's navigating the screen today. So we just want to take a quick second to show you on the website the place where all of the resources for the funding round are available. And in particular, today, we're going to show you where the retained earnings calculator is located on the website. So if you navigate to cdfifunds.gov, as you see on the website here, on the screen here, and hover over Programs and Training, depending on whether you're applying for CDFI program or NACA program, you'll click on one of those 2 options. But today we're going to click on the CDFI program because we're talking about matching funds. And when you get to this page, you'll scroll down a little bit until you see the 5-step process. And for the resources, you'll want to click on Step 2, Apply. And once you click on Step 2, Apply, you'll scroll down a little bit on this page. You'll notice the key dates for the funding round, the information for accessing recordings of the webinars we've already completed, as well as how to call in for the webinars that haven't occurred just yet. And then below that, you'll see financial assistance application materials and technical assistance application materials. So the presentation that we reviewed today is, as Elizabeth said, part of a bigger presentation that's included here as item number 2, I believe, the CDFI and NACA program application overview. The NOFA is listed here as well, and the key guidance documents. But for the purposes of the rest of the presentation today, we want to take a look at item number 10, which is the retained earnings calculator. So we're going to go ahead and open up the retained earnings calculator for everybody and do a quick tutorial of how to use this calculator. And while we get the presentation squared up here, I'm just going to mention really quick before we get into this that the intention of this tutorial is not to go line by line and instruct folks on what to enter into every single line and cell of this workbook. And the reason of that is both in the interest of time and to make sure that we're maximizing the relevance for everybody who joined us on the call today. So we'll be sticking to common issues and concerns that folks have had and that we've noticed that people have submitted to us via service request. And we also really encourage you to review the fiscal year 2022 matching funds guidance. These instructions have, this guidance has detailed instructions on how to fill out the retained earnings calculator for each different type of applicant. Okay, so we've opened the retained earnings calculator, and you'll notice that there's only one tab here when you first open the calculator. The only thing you have to do on this tab is to put your name under the name of the financial institution, and then pull down the drop-down of the second cell and select your organization type. So once you do that, a second tab will appear. And for the purposes of our first example here, we're going to talk about what it's like as a regulated applicant to fill out the retained earnings calculator. So just for example's sake, we're going to choose credit union. And you'll see that once you've selected an organization type, a second tab appears at the bottom of the page. So we're going to go ahead and click on that second tab. Excuse me. A couple things to note here. The red cells here on row 9, you want to make sure that the most recent fiscal year is noted on the rightmost column here. So we're going to go in ascending order, earliest date on the left and the most recent date on the right. You do have to fill out all 4 years of this calculator, regardless of which years you think that you'll want to use retained earnings for. We ask that you do fill out a full 4 years as a regulated institution. So as a note here, when you're filling out the info from your call reports in particular, and Andrew, want to scroll up a little bit to the top of this. There we go. Thank you. So for total net worth and uninsured secondary capital, when you're filling out information from your call reports in general, just keep it simple. You only need to provide information that comes directly from your call reports per the instruction. And we've done our best here to try and put exactly which cells from your call reports we're asking for. So you'll see here, for instance, total net worth as a credit union is going to be your PCA net worth calculation worksheet, line 8. So that's all you have to do. Just submit that one data point from your call report for each of these 4 fiscal years in all of those cells. So scrolling down to the next section on income from federal sources, that would be up 1. Thank you. Yep. On section C, a tip for this section is just to make sure that you list income sources from federal sources in the year that you received them, which is not necessarily the year those sources were awarded. So what I mean by that, for instance, is if you're a prior CDFI fund award recipient and you received an FY 2019 CDFI FA award, for example, but your organization didn't receive that award until your fiscal year 2020, you would report that information under fiscal year 2020. And the same goes if your organization received a prior award in 2 payments over 2 different fiscal years. You would want to break out those payments and that award on these federal income sources under the 2 years where you received payments on that prior award. A tip here, just so that folks know, when we're reviewing these in-house, it's really helpful when applicants separate out CDFI fund awards as separate line items under Section C. That just really helps us to make sure that, to verify that all the applicants have included all of their relevant prior awards from the CDFI fund as income from federal sources. So scrolling down to Section D is matching funds used in prior years. Another thing that sometimes trips folks up on this section, we are asking you to cite matching fund sources used in prior years, but you'll be listing them under the year that the source was received. So for instance, for example, if you received a fiscal year 2021 CDFI FA award, and as a source of matching funds, you used a grant that you received in 2020, you would list that as a source under the year 2020 because that's the year that you received the source. You can refer back to previous award records in AMIS to just verify what sources you used for prior awards. And just note that this section, Section D, is not the place where you would list any prior retained earnings used. We'll get to that in just a second. And one other note here, which is an issue that some folks often ask us, if you've used matching fund sources in previous years, in particular grant sources, you may see amounts of matching funds that actually exceed the total amount of your previous award. So all you need to do is to list the amount of matching funds that you would have been required to submit for that previous funding round. And what I mean by that is if you received an award in fiscal year 2021, and for that award, you used a grant as matching funds that was a $1 million grant, but you only received a $500,000 award, you would only need to put down $500,000 because that was the only amount of match, the full amount of match that you would have been required to submit. So scrolling down a little bit to the next line, you'll see that the adjusted, that line E1 here, FYE retained earnings used, this is actually the section where you would list any previously used retained earnings that were used as matching funds. So if it's a fiscal year end retained earnings used, that will be noted in your previous award records and broken out by fiscal year. So you'll be able to coordinate that with your previous award records. And only if you see a previous source that was a 3-year average retained earnings, you can use the cells G, 26, and 27 to report that previous 3-year average used based on whether the overlap is 2 years or 3 years with the current matching funds window. And then on line F, the adjusted retained earnings available for use will automatically populate based upon the information that you've entered above. In line G, you can enter into this cell in line G the sum of any fiscal year-end matching funds available from the line above that automatically calculated, but only add in amounts from years within the matching funds window. And as Elizabeth said earlier, that matching funds window this year starts on January 1st, 2020. So you can add up any cells from line F within the matching funds window, and that'll go into this cell in line G. And as a note here, a tip, if any of those amounts are negative, you do not need to subtract them from the total. You can treat any negative retained earnings available as if they were a 0 value The 3-year average amounts on the right-hand side, these will also calculate automatically. And note that generally the CDFI fund, when we're allotting the retained earnings that you'll need for your award as matching funds, we'll start with fiscal year-end retained earnings, and we'll use the earliest years within the matching funds window first. And generally, we'll only use 3-year average retained earnings in the event that it happens to be more favorable to the applicant because it's greater or it just works. It makes more sense to use 3-year average. So if a regulated group is unable to use 3-year average or fiscal year end for retained earnings, they do have an option for since inception retained earnings. And that, again, is regulated institutions only. And it starts here in line K. This section is actually very intuitive, so we're not going to go through it line by line, but there are a couple of things that we do want to call out for you. In particular, if you scroll down to Test 2, for regulated groups, we apologize. The initial version of this document that we loaded on the website contains a typo. So if you if you go onto our webpage to the place that we navigated to earlier, you'll notice that this matching funds calculator was updated on March 18th. And the reason that was updated because there is a typo here in lines P and Q for all regulated institutions. So the first edition of this document said that we were asking for December 31st, 2019 and 2020 call reports, and that's incorrect. What we're actually asking for is December 31st, 2020 and 2021 call report information in this first section of Test 2. So if you haven't started the Matching Funds Workbook yet, we encourage you to go online and download the more recent copy. If you've already put lots of work into it, you can move ahead, but just please do use the correct call reports. That'll be 12/31/2020 and 12/31/2022. And another note here, just unique to bank holding company applicants, for most of this retained earnings calculator, you'll be using the financial information from the holding company, but until you reach Test 2 of since inception. So holding company applicants, once you get to Test 2 of since inception, you'll want to start using the financial information from your subsidiary bank's call report. And that's all we have to go over with regulated institutions. So we're going to go back to that first tab just really quickly and select unregulated institution, just so that we can point out a couple of the key differences here. So the first thing that you'll notice that's a key difference with unregulated institutions is that we're only asking for 3 years of financial data. And if we scroll to the top of this worksheet, there we go, line A. Again, also note that your most recent fiscal year goes on the right, and then we'll move back as you're working your way to the left. This is very, very similar to regulated institutions, but there's just a couple of differences here. And namely, the difference is that rather than using call reports for your financial information, you're going to be using your audited financial statements. So I have a tip here for unregulated groups who are filling out these sections that require information from your audits. When our reviewers are looking to verify the numbers in your form, they're going to cross-check with your audited financial statements to make sure that we can verify where these numbers are coming from and that they align with your audits. So we really do encourage you to keep it as simple as possible. And you are welcome to put formulas into some of these cells, like for total income and revenue, for instance. If there are 1 or 2 things that you want to add together, you can do so, but please enter it as a formula so that we can see the individual numbers that you added together, and make sure those individual numbers tie into something from your audited financial statements. If there's anything that you want to explain to us, please use the notes and documentation column in all the way to the right-hand side of the spreadsheet there. And again, we said this during the presentation, but unregulated groups are able to use unaudited financial statements for their most recent fiscal year. You can see that Andrew's highlighted that here as an option. But again, if you do use this, your retained earnings from that year will be marked as committed at the time that you submit your application. And if you receive an award, the CDFI fund will come back to you at that point and will ask you to resubmit a retained earnings calculator as well as your final audited financial statements, just so that we can verify that all of your retained earnings are in fact in hand. And the final key difference here for unregulated groups is that there are no options here for since inception retained earnings. And so that's basically everything that we're going to cover here in the retained earnings calculator. But just in closing, do lean on the guidance. The guidance is very thorough, and we've worked pretty hard on making sure that it responds to most folks' questions about what needs to happen in the retained earnings calculator. Keep your responses simple, and make sure that whatever you enter into the calculator can be tied directly to your audited financials or your call reports based on your organization type. And so that basically wraps up this section, and I think we can go back to the operator now and open it up for our question and answer period.
If you would like to ask a question, please press star 1 and record your name clearly when prompted. To withdraw your question, you may press star 2. One moment, please, for our first question. Our first question comes from Deborah Reed. Your line is open.
Hi, thank you. A couple of weeks ago, I submitted a service request to ask about whether or not a grant from the Appalachian Regional Commission would be an allowable matching funds, and I got a response back that directed me to go back and reread the instructions in the application. And I had already read them, and I did read them again, and it's still not clear to me. And I know at the beginning of the call you said to submit a service request, but I have already done that, and I didn't get a clear answer. I'm wondering if you could please answer that question for me.
Thanks, Deborah. So I think the piece that we probably don't know off the top of our heads is the Appalachian Regional Commission. Is that a federal source?
It's one of those kind of quasi-governmental agencies, and I don't know whether you consider it federal or not. I don't know. There's nothing that I could find that says it is a federal agency. It has federal funding, but it's not a federal agency. So I don't know where that falls, and I know that in the guidance you have a couple of clarifications in there. For example, NeighborWorks funds that are non-federal. So I just don't know what the answer is, and I was hoping perhaps you might have an answer.
Okay, well, I think what we will do is I can look back and see if we have precedent for either that funding source or similar ones, so if there was information on if they were considered federal or not. We have your service request. Looks like it's number 44848, so we will make sure to follow up with that with you offline.
Thank you so much. Really appreciate it.
No problem.
Our next question comes from Holly Logue. Your line is open.
Thank you. Yes, Andrew, on the sample retained earnings calculator you were just inputting, I noticed you were using fiscal years 2019 through fiscal year in 2022. And since we're not even to first quarter end, and it's asking for fiscal year end data, and the historic period of this application is 18 through 20. It was my intent to use for regulated institutions 18, 19, 20, and 21. Just wanted to verify those time frames.
Hi, Holly. This is Matthew.
Okay.
Yes. Using FY 2018, 19, 20, and 21 is totally appropriate, especially for groups like yours who probably have a 12/31 fiscal year end date.
Correct. Thank you.
Yeah. Sure. And just to add on to that question, the example that you were citing when we chose 2022, that is going to apply more for groups that have a 3/31 fiscal year end date, who may have already completed their fiscal year 2022 at the time they submitted their application. So that's a pretty narrow possibility.
Got it. Thank you.
Our next question comes from Everett White. Your line is open.
Hey, good afternoon. Actually, Holly asked one of the questions I was going to ask, so that was helpful. I want to make sure I heard you right on when the amount in AMIS is greater than the amount of the award you receive for matching funds. So, for example, you look in AMIS, it says $1.3 million for matching funds, but the award was only $700,000, and so we only have to use $700,000 is or the amount of the award. Is that right?
Yep, you are absolutely right, Everett. If you this is something that comes up with groups, particularly groups that have used matching funds in the form of a grant in prior funding years. Sometimes those sources don't get updated after the award is issued. So if your source from a prior year is greater than the actual amount of your award, you only are required to have submitted matching funds for 100% of your award amount. If your award was $500,000, regardless of how much matching funds in the form of a grant you submitted, you still only were required to submit $500,000 in matching funds.
Perfect. Thank you. One more question about when the income from an award comes in and should be reflected in the retained earnings calculator. Some banks recognize the income before they actually receive the award. So if you have a situation where it's late December and the award announcement comes out, if the applicant recognized that income in that year but didn't receive the funds until the following year, which year should we report in? Does that make sense? Yeah, it does. And so I think that in general, what we are looking for is to make sure that however it's reported in your financial statements is how you're reporting it on the calculator. If it's not clear, we always encourage you to use the notes column to let us know what's going on, especially if something is, not abundantly clear, right? But yeah, definitely refer to your call report from your regulator and just make sure that what you're putting in the calculator here aligns with how it's reported in the call report. Perfect. Thank you very much. Yep.
I show no further questions in queue.
Great. Well, let's go ahead and give a few more minutes in case any additional questions come in. But this has been a great session. We thank you all for tuning in and for your questions. Matching funds, of course, is everyone's favorite topic, so happy to be helpful where we can here. Operator, are there any more questions?
I show no more questions in queue. One moment, please. We did have one pop into the queue. One moment. Our next question comes from Amanda Schaub. Your line is open.
Hi. I had a question regarding the in-hand versus committed and the date that we needed to have it fully in hand. So we were planning to use a state grant of $1 million, and though it's a reimbursement grant. So we have the contract fully signed. We're starting to allocate out of it, but we don't actually get the funds in hand until they're spent and we voucher for them. So am I understanding right that the grant would need to be completely vouchered to be counted as in hand by January, mid-January of next year for us, and that's when we could take a drawdown for CDFI award?
That is a great question. Thank you. I am, thinking through the different scenarios. The fact that it's a contract,
so we have the contract for the grant award. I don't know. Maybe I didn't make that clear. So we have the full amount committed through our grant contract with this state source, but we don't get the money until we spend it, submit a voucher, and get reimbursed. It's a reimbursement-based program.
Right. So this is Matthew. I'm going to jump in real quick just to clear up that one issue, which is that if you're using a grant, it can't be a contract for services rendered, right? So it can't be a payment that you received for some sort of service that you.
Oh, it's not. I'm sorry. Well, there is home improvement lending dollars, but as we finish the project, so we do a home improvement project, and then those dollars get reimbursed after we've deployed them and closed.
Okay.
Is that still count as service rendered?
No, but what I would suggest for this one, because it's a little particular to your organization, is that you would just submit a service request on this one, and we'll try and answer it for you that way.
Okay. Thank you so much.
Yep. Thank you.
I show no further questions in queue.
Okay, great. I'd like to thank everyone for joining us today. If you have additional questions, do feel free to submit them via service request. We are happy to try and answer them the best that we can. Good luck on your applications, and we look forward to reading them. This concludes the call.